Hi, welcome to the Crypto Republic. Before we begin today, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest high-energy updates in digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to the Crypto Republic. Bringing you updates every day at 9 a.m., noon, and 7 p.m. Eastern Standard Time. Just a reminder, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions. Well, ladies and gentlemen, why the next 4 days matter more than you think for XRP. Let me ask you something. What if the next 4 days don't just move crypto prices, but quietly lock in the financial infrastructure XRP was designed for? Because right now, institutions aren't debating crypto anymore. They're deploying. Banks, asset managers, regulators, all moving at once. And most people won't realize what just changed until after the market reacts. Stay with me, because this is information nobody else is connecting you yet. Before we dive in, thank you to everyone who takes the time to like, subscribe, comment, and share these videos. Your engagement helps get this information in front of more people. Your support allows me to keep bringing these deep dive, high-value insights to the crypto community. And I love everyone's perspective, take, and I love answering questions. Well, ladies and gentlemen, think of it like the introduction of the telegraph in the 1800s. At first, only a few banks and trading houses used it, and the average person didn't notice. But the invisible technology quietly reshaped commerce forever. Today, we're breaking down why January 15th matters, why Wall Street's flipping faster than most expected, and why XRP sits directly in the path of transition. Pay attention, because the next few minutes could change how you view the market entirely. Institutions have officially flipped, ladies and gentlemen. We recently heard Bitwise, one of the largest crypto asset managers, confirm what many of us have been watching all through 2025 and now in 2026. Institutional players are officially warming up to crypto in size. Let this sink in, ladies and gentlemen, in size. Not theory, not pilots, not research divisions, actual products across the board. Banks are starting with crypto trading, stablecoins, tokenized deposits, yield-based products. Nothing extreme yet, and that's important, because this phase isn't about innovation headlines, ladies and gentlemen. It's about quietly integrating crypto technology into internal banking systems. Once that happens, everything changes. Cross-border payments begin moving on-chain. Stablecoin settlement starts flowing bank to bank. Digital wallets get embedded directly into banking apps. TradeFi and DeFi don't merge overnight. They converge silently and quietly. And remember, this didn't start this month. It started years ago when policies slowly shifted in favor of risk-managed crypto activity. Check this out. The banks are moving like clockwork, following clear incentives, not hype. Imagine being in New York City in 1880 and seeing a horse carriage line. Then suddenly electricity and telegraphs allowed commerce to move faster. But only a few noticed at first. That's where we are with crypto rails today, ladies and gentlemen. Most people won't even realize it's happening until it touches their daily transactions. Let's talk about why regulatory clarity is the real catalyst, ladies and gentlemen. Here's the part retail usually misses out all the time, unfortunately. Institutions don't chase price, ladies and gentlemen. They chase clarity. You have to have clarity. Without clarity, it's just smoke and mirrors, unfortunately. And that clarity signal came a year ago. In January 2025, Federal Reserve Chair Jerome Powell made a critical statement that flew under the radar. He clarified that the Federal Reserve was not trying to push crypto out of the banking system. Banks are allowed to serve crypto customers as long as risks are understood and operations remain safe and sound. Even more important, he stated banks should not debate legal crypto customers out of a caution alone. That single policy signal reframed crypto from regulatory danger to a manageable financial activity. That was the turning point. Policy moves first, price reacts later. This is similar to how the TCP/IP protocol quietly spread in the 1980s. Most people didn't know it was running behind the scenes until the internet suddenly transformed the world. Crypto adoption is following the same invisible pattern. And remember, as we move into January 2026, that same logic is why banks are already positioning for action before any votes are even held. Let's talk about the green lights across the board. Since then, the alignment has been undeniable. The Federal Reserve, the OCC, Office of the Comptroller of the Currency, the FDIC, all have now made it clear that banks can engage with crypto. And what followed? C embracing crypto services, citing regulatory shifts in stablecoin legislation. Bank of America recommending clients allocate up to 4% of portfolios to Bitcoin and crypto. Let that sink in. 4%, up to 4% of crypto. That's massive. That alone is so huge that you see it also on the news. That's massive. It's just massive because that tracks flow of funds into sectors and space. Morgan Stanley, a $1.6 trillion financial giant, filing for a Bitcoin trust with the SEC. These institutions don't move early. They move when the risk flips in their favor. 2026 is not a year of planning. It's a year of execution. Reported by major financial media outlets, these shifts are happening quietly but everywhere. I want you to think of the Bretton Woods Agreement in 1944. At first, only policymakers and large banks understood it, but it quietly set the foundation for decades of global currency stability. Crypto adoption is following a similar behind-the-scenes path. Well, ladies and gentlemen, I want to talk something real fast about this. What we're seeing right now all over the world is staggering. You're seeing things happen at a pandemic rate. And why I say that is because we have the good news out of UK for XRP. That's massive because that links up with the regulatory situation groundwork in Singapore. Once you have some of the major financial hubs doing this, you can see it taking shape and form. January to me is always a seasonal gold story because if you look at gold over the last decade, 70% has been stronger for gold in the last decade. January's always a strong move from gold. There's a couple of reasons of why. I touch on this in our Patreon premium section, but gold is a strong play because of quarter one, mines output down, quarter four, inventory for jewelry down. A lot of reasons of why. People were asking me about that, so I just want a quick answer to that. But, again, I want to talk about structure. And like I said before, I believe in portfolio management, okay? And this is not financial advice. I believe in building a portfolio and investing for the future. That's what people retain ourselves in our organization of why we talk about this. That's why we play seasonal trends. If I'm going to trade something, I have a time frame of why I'm going to trade this, right? Always. There's got to be a time frame, right? With any trade, when you get in, when you get out, is it a scalp? Is it a weekly, monthly? What are you doing and why? Things on the horizon. The 15th is coming, the Clarity Act. They're going to talk about this. They punted on the decision for tariffs. They got to come back to that. People are pricing in a March rate cut. BOJ dovish. There's so many things that could spike the market one way or another, right? But if you have a trading time horizon, that's different than if you have an investor portfolio horizon. I'm excited about all the structure going through. I love it. I'm very excited about this. Again, we're going to have to see what happens, right? I don't know if this is a news rumor mill, but again, a lot of big things are happening, and these are good things. So stay frosty. Get that Gucci clarity. Don't get cut up like sushi. If you're going to enter the market this week, understand that people may cover before the news. There could be overreactions, right? Pay attention to how institutions play. I always harp on this. If you're new here, welcome. Please subscribe. Thank you. Welcome everybody who's joined the membership part of our channel. Thank you for the support keeping this channel going. That's awesome. Thank you everyone who's joined the Patreon in any shape and form. That's awesome. Supporting this. Everyone who wants to learn, thank you very much. And welcome. Always welcome. Welcome to the pack. But again, institutions will trade between levels, lines. That's just how they do it. Okay? Everybody's watching the same thing. I don't want anyone to get cut up like sushi this week, right? So just be careful with all of this, right? Let's talk about from worthless to bank grade collateral. Here's a shift that tells you everything. JP Morgan Chase is now accepting Bitcoin exposure as collateral. Also, JP Morgan was out talking about how XRP has become an alternative to SWIFT. That was in a report. It's big news. They've already accepting BlackRock's Bitcoin ETF shares, and filings showed over 343 million in Bitcoin ETF holdings as of late 2025. They're now exploring direct Bitcoin and Ether collateral through third-party custodians. Yes, Jamie Dimon has historically criticized Bitcoin, but actions matter more than opinions. Crypto is now being evaluated as financial infrastructure, not speculation. Ladies and gentlemen, remember, the narrative is flipped. Price follows infrastructure, not the other way around. This reminds me of the first railroad bonds in the 1800s. Investors didn't trust them at first, thinking railroads were risky. Once infrastructure proved reliable, bonds and rails became core to the economy, much like XRP today. January 15th, why this date matters, ladies and gentlemen. Let's talk about the countdown. January 15th, 4 days away. Senator Tim Scott, chairman of the Senate Banking Committee, scheduled crypto market structure markup. Senator John Kennedy confirmed the timing publicly. The bill covers token classification, stablecoin frameworks, exchange oversight, regulatory clarity for digital assets. This is part of what's commonly referred as the Clarity Act. And again, institutions already positioned as if clarity is coming. That's how serious this is. Think about it like this. This is not hype, it's process. Policy, capital, infrastructure are aligning. It's really similar to how the SEC structured stock markets in the 1930s after reforms. Unseen at first, but it set the foundation for decades of regulated trading. Let's talk about political pressure and delay risks. Could this get delayed? Yes. Government shutdown risk, political maneuvering, influence from large banking interests. We've already seen concerns with other legislation like the Genius Act, where attempts were made to limit stablecoin yield outside traditional banks. That's the real tension. But here's the key point. Even delays don't stop adoption. They slow it temporarily. The infrastructure is already being built. The incentives are aligned. Capital is quietly moving into place. And when you think of a slow rollout of the internet in the 1990s, infrastructure and protocols were there for years before mainstream adoption exploded. Where XRP fits in all of this, you might be asking, ladies and gentlemen. This is where XRP becomes unavoidable. As value moves on-chain, speed matters. Liquidity matters. Regulatory comparability matters. XRP was built for institutional settlement, not hype cycles. As banks integrate crypto rails behind the scenes, utility-based assets benefit first quietly. Most users won't even realize they're using it, and that's exactly how mainstream adoption begins. Think about the credit card adoption in the 1950s. The technology was invisible at first. People didn't notice it until it became seamless, the same way XRP moves silently in the background. So, ladies and gentlemen, when people ask why the next 4 days matter, it's not about hype, it's about policy, infrastructure, capital aligning at the same time. Price reacts later, it always does. Pay attention one last time, ladies and gentlemen. The foundation is being poured right now. And by the time most people notice, it'll be too late to position optimally. If you made it this far, I really appreciate you in the video. I had something else I wanted to talk about today, but I felt that this is more pressing. I preach about structure because in the commodity game, right? Physical commodity game, and then you go into the future part of it and you go into everything else. Without structure, regulations, and licenses, it becomes impossible to extract value from the commodity that you're going to basically produce. That's the same thing with getting a precious metal smelter, refinery license in overseas countries, getting any form of licensing from the government. Without that, you have nothing. You're not going anywhere, okay? So, to me, as these dates come, they're very important. I see this passing. I'm going to be the optimist. This is me, and this is what I'm telling people. And if I'm wrong, I'm wrong. I don't care. Okay? I don't care if I'm wrong because I know in the long run we'll be right. They can only slow us down so much. Because again, the banks take second stage to the United States Treasury system. As far as I'm concerned, they're a component of that. They're just a barnacle on the ship. The barnacle is not going to tell the ship which direction to go. It's just on the ship feeding, okay? So again, the digital Riem Yuan, they have yield over there. The U.S. Treasuries are now wrapped up in the stablecoin regime that we're going up against the Brits and the unit. That's most important. So this is how they're going to continue selling treasuries to finance the debt. That's the most important thing right here, right now, okay? As far as I'm concerned, right? So if I had to be a wagering human being, and I've wagered my entire life, that's what I am personally wagering on, okay? And anyone who retains our organization, our services, why? They want us making those decisions for them. And the people in the Patreon hear the discussion I'm talking about, they're hearing why we're making these decisions as well, okay? So again, right? Buying the rumor, selling the news is a dangerous game. I've made a living, and I've done very, very well for myself and a lot of other people who have retained our organization over years and learned from people who do not speculate in circumstances like this. The way you speculate in circumstances like this is going further out with your convictions of why. Gucci Clarity, Jesse Livermore, small position size, not getting chopped up like sushi. Again, there's a lot of things that could come out at any time that could derail certain things. Keep powder dry. Keep some powder dry, as we always say. So if there are deeper pullbacks because there's an overreaction to something, you can take advantage of it. Other news, you have the BRICS and the Global South doing naval exercises off of South Africa. The world is changing. And again, stay frosty here. Stay frosty. Wait for conviction of mind. Conviction of mind is not stupidity of mind. Conviction of mind comes from our research that we're talking about, our recce, where we're going, and why. Okay, ladies and gentlemen, remember I said, we're in this for the long run. This is a profession. This is an occupation. This is not some get-rich-quick scheme, okay? Remember, never throw mud on anybody. I always tell you this. You know why I say never throw mud on anybody, where that comes from? When we went to Florida Mercantile Exchange, they were pits. You'd go into pits. I was always going into multiple pits because I was trading everything, okay, depending on what your badge was, right? I traded everything. I love this game. I tell you this all over again. I love the chaos. I love being a financial mercenary. I love this game. I am designed for this. Some people are designed for this, and they just thrive. That's just the way that it is. You don't throw mud on anybody because you can't wash off the mud once it's on. So you'd step into a pit and you're going to insult people who you see every day trading. Now, some people are trading their own money. They're local, right? Some people are trading for big institutions, funds. Some people are doing both. But you don't throw mud on anybody because you're going to see them every day. Why would you insult someone? It's not a classroom to basically have a fist fight with somebody. I mean, I saw some fist fights on the floor of the Mercantile Exchange, people getting barred, paying the $5,000, fine and everything like that. But it's bad business. You don't do that, because you're going to see the same people every day. So I never could understand that. And again, I come from the white shoe, old school regime of this game. Once you throw mud on someone, ladies and gentlemen, there's no washing it off. I'm sorry, I can't wait to see what happens this week. It's going to be super excited. Have a blessed Sunday, everybody. I love everybody. I love your comments. I try to get them as fast as possible. And, as always, if you found value here, hit the like button, subscribe, turn on notifications. Your engagement helps get this information in front of more people. Thank you so much for liking, tuning in, sharing, subscribing, commenting. Have a great day. Always stay emotionless. Watch XRP close. This could be a defining moment. This content is for informational entertainment purposes only. It should not be taken as financial advice. Always do your own research and consult a licensed financial advisor before making investment decisions. Remember, the game is changing, and those who understand it first will benefit the most. Make sure you're on the right side of it. You have two choices. You can be like the crowd, reacting after the move, rationalizing why they missed it, telling themselves to never let it happen again. Or you can be the one who saw behind the curtain, the one who understood the infrastructure shift, the one who positioned early, not randomly, but intentionally. Because some moments in history are loud, but the ones that change everything are quiet right up until the moment they're not. And this is one of those moments. Do not blink, because the world is distracting you with noise while XRP continues developing behind the scenes and building momentum in the broader digital asset landscape. Stay sharp, stay informed, accumulate knowledge. Your move now will be remembered. This is not the end of the story. This is just the beginning. If this opened your eyes, smash that like button, ring the bell, leave a comment with your thoughts. Turn on notifications, and most importantly, subscribe to the Crypto Republic. We break down the major global banking trends shaping digital assets today, giving you context, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, and stay in the Republic. Have a blessed day, everybody.